All right. Welcome back to Not Financial Advice. Today we're going to be taking a look at just over $1,100 of stock buys that I executed on Friday morning. It is Sunday afternoon. So all of these buys were posted and locked in, and we're going to go through them together. I'll ask you to like the video and subscribe to the channel, and we're just going to jump right into it. So, if you've been following along with me in my investing journey over the last 2.5 years, I have gone from making extremely concentrated bets uh, to flirting with extreme diversification, sometimes buying ETFs, other times not buying ETFs. And I'm really just trying to nail down what my investment philosophy or style is. What I will say is that I haven't taken losses in the market, I've only taken gains when I pursue a strategy or particular investment um, that I no longer feel is the best way to proceed. I'm just kind of sticking with this philosophy that I bought it for a reason, and that over 10 or 20 years, even if I was at the wrong time, that a percentage of my picks will perform well enough to make up for any losses that I might ultimately have to realize. So, um, not taking losses, but definitely being open-minded and having a changing philosophy in how I invest. So, this week I went in with an approach to try and buy some stock of companies that I felt were either good companies or excellent companies trading at or below their fair value. And so my first buy was Winnebago, the manufacturer of RVs, sort of a mid cap value company with some good growth and good fundamentals behind it. Also, I have a little bit of a bear sentiment to me, so there's definitely, defensive type companies that I enjoy. So I've piled into Smith and Wesson, and my cost basis is pretty high, but I see the stock as being significantly undervalued. Great starting yield, a small cap value stock, one that I think in the long run I should do very well with. So I added there. Coors, again, a little bit more of a defensive stock, one that I think is currently undervalued. I'm up on this and I'm adding to it. It was a fortuitous investment before the whole situation with Bud Light, but it's one that I like and I think it's valued fairly at this time, so I added there. Similar deal with Tyson. It's just a bet on uh, the concept that people eat meat, protein, um, beef, poultry, pork, things of that nature. So one of the largest producers of protein in the world, based in the United States, exporting to other parts of the world. think it's very, I think it's fairly valued. So I added another 50 here. Target, um, a discretionary consumer stock, but I'm my competitive advantage is just that as an average American. So I'm a consumer first and foremost, and those are the things that I understand. So I think that Target has incredible brand value. I think it has a moat because of women's proclivity towards this brand. Women drive consumer spending in the United States. I think Target is a great franchise. I like what they did to diversify away from pure retail with some online offerings and some curbside offerings. I like the partnerships they have with other companies such as Ulta Beauty or Starbucks. So I think it's an attractive starting yield by all means and undervalued. So I'm adding here. Also, Dollar General, similar story. This is a stock that's outperformed the index for some time, but now it's down about 55% from all time highs. I'm familiar with the types of things that are going on behind the scenes that have caused this change in price, but I think this is a wide moat company. I think it's Walmart for rural Americans. I think it's a sound investment. So I am adding here at a price lower than the company was pre-pandemic. So I think this is one that's going to pay off for me well in the long term. Meta, one that I do not like this company from a consumer or user standpoint, um, but I understand their profitability and how sticky these platforms are. So I added a small amount in the depths of the 22 bear market. I'm up some ridiculous amount. So I'm averaging up, but I still see the stocks and the shares as being undervalued. So I'm adding there. Alphabet, So an exceptional company, very high returns, more watch streaming hours and advertising power than any telecommunications streaming company like Netflix. So this is kind of like a gimme, but I'm adding here. I still see the shares as undervalued. Additionally, Williams Sonoma, one I've done a recent video on, but this is kind of like where the moms of the women who shop at Target spend their money. And so French iron, French cast iron skillets for ritzy upscale people. Um, it's a consumer play. Makes sense to me. Walgreens Boots Alliance. This is one that very much so could be a value trap. Very high, dangerously high starting yield. I'm into it. A little bit of sunken cost fallacy, but I think that there's always going to be room for a physical pharmacy. We'll see if that ends up not being true, but a place where you can get ice cream and contraceptives at 11 a.m., or you can get your medications in the morning, and a brand that has some pretty good locations throughout different communities. One that I've been given money to for a long time, that I might as well own it, and I think it's in that deep value territory. So we'll see how that turns out. And then lastly, we had a $518 contribution into essentially a total U.S. stock market index fund through my work. So this is where I'm at. These are my recent buys, some of the concepts behind why I bought them. And thanks for stopping by.